Hello everyone, welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of June the 4th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, we're coming off the non-farm payroll number on Friday, a very, very strong number here, guys. 7.6, I believe, on the U6 number, the headline number, above consensus. Just nothing bad in that report at all. So in layman's terms, it should favor US dollar strength, but nothing is positive here. When we look at the previous week's trading in the dollar index, critical vantage point support at 93.56. We've put a top in at 95.10, but you'll notice here when I've drawn this in that this is connected to a more significant swing high back here up to the November 7th high. That's coming in around 94.35. The market's made a slight break of that particular area and now it's turning back. So the critical vantage point levels, we're looking for them to hold. However, we have a crossover to the downside on the predicted MACD. The RSI is turning off the 50 level and not breaking below 40. So it still looks like the dollar is going to rally. And again, a very, very strong report here. Now, when we look at how the equity markets have reacted to that, they've reacted strong, but the only thing is that I'll point out is we haven't broke this resistance zone at 27.40. We have very strong support, however, down around 26.80, but we're still locked within this very tight range that we've been in for the last several weeks. So only a sustained break of 27.40 is going to take the pressure actually off the downside on the stock markets. Now, oil is turned, but we're holding down near the bottom part of this range around 65. Oil still very clearly bullish on the year, guys. We opened the year around $60 a barrel. We're still up 10% on the year. No reason to panic just yet on oil prices, but it is carrying a bearish tone. Now, again, with such a good labor report out of the U.S., the only thing that's overshadowing the dollar strength right now is, of course, this talk of trade wars. Nobody wants a trade war. We can only hope that this will go away, but right now it certainly is a problem. Now, with those trade wars, that's helping gold a little bit, but not enough in my respectful opinion. We're playing a very tight range between basically around this 1311, 1320 area. The downside at or about from last week, closing out the week rather low, down towards this 1293 area. But again, it's going to be difficult for gold to rally as long as we're getting these kind of labor reports out of the US. Very, very strong numbers. So if gold continues to press lower here, guys, then that's probably going to see Euro US continue its downward slide. You can see that we've come back up on Friday to test this 117.15, 117.20 area. However, residing at that level, 117.53 is the key vantage point long-term pivot area. Unless we can break 117.53, clean break, close above it for several days, then the pressure is still on the downside here. We can see the rejection of the RSI here, suggesting that essentially it's a very mixed bag, but the dollar strength at the beginning of the month is likely at this time to prevail. So potentially we could have some buying opportunity on US Swiss franc. We've hit our low point for the week last week, coming in down at or about the 98.27 area, but we're getting all tangled up in the 99.14 area along that key vantage point pivot area. The indicator's still not pointing to a confirmed long yet, but we need a sustained break of 99.14. Very difficult trade, but if the equities turn around, US Swiss franc should turn around and move higher with it. Now, with Great Britain US, very little new to report here on this pair. Still in a bearish pattern, holding below 133.35, that key vantage point medium-term pivot area. But our medium and long-term predicted difference, our MACD, and even our RSI, they're starting to warm up to a potential long trade here. So it's something we want to keep an eye on. But the first thing we need, guys, is to hold above 133.35. And then we would look for a retest of the 134.27 area. Now, again, a very tricky pair, this one, because of Brexit talk and everything else, but it's still holding in a bearish formation. But an underlying buy signal is starting to form here, unquestionably. So When we're looking at some of our additional pairs here, the dollar yen could be some opportunity here for us next week. Good base support here at 108.20, but if the trade war continues the talk of trade wars, continues, that could be a real problem for the dollar yen. Right now, we finished the week right up on that key vantage point level, 109.52. We have a clear buy signal here on the medium term crossing the long term predicted difference, the RSI. Momentum starting to build here, but we need to break free and clear of 109.52 if this pair has any chance of moving back towards the most recent swing high in the 111.40 area. Now, as we come into our main three commodity currencies for next week, oil is going to be a determining factor for the US CAD. You can see our resistance area, 130.50. If we break that, that could send us to 131.45, where your order flow guys are likely to come in and look to short this thing. Now, we've got our medium term crossing our long term predicted difference. I'm just going to draw this right in here so everybody can see it right there. The medium term VantagePoint's proprietary indicators measuring the medium term trend against the long term trend. Right now, this pair is still bullish while oil is on the slide, but a lot of people really talking up how bearish oil is going to get. I'm not in that camp as of yet unless we break through $60 a barrel. So as long as we're above $60 a barrel, the risk is always going to be to the downside on this particular pair, respecting this time of year. But for that to break through this level, we must get through 128.90, the key vantage point level. We've closed bullish on the week, 129.50, but this is a classic sell zone, guys, up into this particular area. Now, as we're looking at some our other two main commodity currencies, Aussie US, New Zealand US, again, very little new to report on this one. We've had a slightly higher low from last week when we draw it in right here on this particular bar. But again, the low point there is 74.76. I've talked about this area over the last few weeks. Now, we're closing above the key vantage point level at 75.45. If the equities can turn higher, that should help out the Aussie and the New Zealand currency. But if they don't, then this pair is going to come under significant selling pressure yet again. But what we're really looking for, guys, is a break of this tight channel we're in, 76.20. If we can get that, we should go higher, but you can see we're losing momentum on the predicted RSI, predicted MACD still below the zero line, and the predicted difference is also failing below that level. So not necessarily a bullish case unless we can break 76.20. New Zealand US, guys, very similar play here. We can see the key vantage point level coming in at 69.65, but this double top here sitting on these particular bars here, we can see that double top coming in around 70.23. We need to break free and clear of that. Now, the indicators from VantagePoint, very mixed, but we are clearly lacking momentum. So if we get into a risk-on scenario in the markets, Aussie and New Zealand may turn around, but again, we have to break through these key levels. So with that said, this is the Forex Weekly Outlook for the week of June the 4th, 2018.